This coming week, three separate forces hit the stock market, and they're stacked back to back. Wednesday, the Federal Reserve. Friday, the single largest options expiration in history. And running underneath both, a third one almost nobody is pricing in. If you own a single stock or index fund, this is the week that actually matters. Here's your map. Chapter 1. The Setup. First, why is this week different from any other? Because the market is walking in already tense. Inflation just came in at 4.2%, the hottest in 3 years. With wholesale prices running even hotter at 6.5%, that alone would make any week jumpy. But this time, 2 scheduled events land in the same 5 days, and a third, unscheduled one is smouldering in the background. Most weeks have one catalyst. This week has 3. When catalysts cluster like this, they don't just add up, they amplify each other. So let's take them one at a time, starting with the one everyone is watching. Chapter 2. Wednesday, the Fed. Wednesday at 2 p.m. Eastern, the Federal Reserve announces its decision. And for once, the decision itself is not the story. Markets price a 98% chance the Fed does nothing and holds rates right where they are, at 3.5 to 3.75%. So if the move is a non-event, what matters? 3 things. 1. The new chair. Kevin Warsh took over the Fed in May. He inherited a deeply divided committee, and this is his first real test. Markets will read every word for his lean. 2. The dot plot. The chart where each official marks where they think rates are headed. It still pencils in 1 cut for this year, but traders now put the odds of 0 cuts in 2026 at 57%, and the big banks don't see a cut until mid-2027. If those dots move up, the rate cut dream officially dies. The takeaway? Don't watch the rate. Watch the dots and the tone. That's what moves your portfolio. But Wednesday is the warm-up. Friday is the storm. Chapter 3. Quad witching. Friday is quadruple witching, and this one is the largest in market history. Here's what that means. 4 times a year, on the 3rd Friday, 4 different kinds of derivative contracts all expire on the very same day. Index futures, index options, single stock options, and single stock futures. Every trader holding them has to close, roll, or settle, all at once. This Friday, the notional value expiring is about $7.1 trillion, roughly $5 trillion tied to the S&P 500 alone. That is, by Goldman's count, the biggest expiration ever recorded. And it creates a bizarre effect called pinning. As contracts near expiry, the dealers who sold them have to buy and sell huge amounts of the underlying stock just to stay balanced, and that hedging literally drags prices toward the big, round number strike levels, like a magnet. So a stock can hover, almost glued to a price, into the close. Most of this is mechanical, not fundamental, which is exactly why it fools people. Huge volume, wild intraday swings, and almost none of it about the actual companies. Now, remember that third force I mentioned? Chapter 4. The Wildcard. Here is the one almost nobody is pricing in. On Friday night, the government forced the maker of the most powerful AI model to switch it off, and the whole market walks into Monday with the AI trade suddenly nervous. Why does one company matter to your index fund? Because the top 5 stocks now make up about 30% of the entire S&P 500, the most concentrated the market has been in 50 years. That means a single wobble in one AI name doesn't stay contained. It drags the index and your fund with it. So you have a jumpy market, the Fed on Wednesday, a record expiration on Friday, and a fragile AI trade threaded through all of it. 3 forces, 1 week, fully loaded. So how do you actually play a week like this? You don't. Here's the honest mental model. Almost everything that moves prices this week is mechanical. Positioning, hedging, and tone. Not the long-term value of what you own. The Fed won't move. Quad witching is noise by design, and the AI jitters are about concentration, not collapse. For a long-term investor, the single best move during the loudest weeks is usually to do nothing at all. Watch it as a spectator, learn the machinery, and let the people trading the noise trade the noise. The signal comes later. The week is just the weather. If this map made the week make sense, subscribe. We break down one big market moment every week before it happens. Next up, the dot plot, explained. How 9 dots on a chart move trillions of dollars.